You may not heard of them, but you are using their technology every day. Most probably, even right now. Qualcomm played a main role in the development of mobile technology. They have thousands of patents that allow our phones to work. This intellectual property is so critical that it is nearly impossible to manufacture a mobile device without licensing Qualcomm's patents. That is why this company earns an estimated $20 for every new phone sold worldwide. They are also one of the biggest semiconductor companies in the world. Qualcomm's Snapdragon processors are at the heart of many smartphones. Basically, this company rules the mobile technology market, and its stock went up by over 79% in 1 year. So let's analyze this company to see, is it too late to buy its stock, or are we just at the beginning of an upward trend? If you were to invest $1,000 into this company 10 years ago, you could buy around 13 shares, and now they would be worth something close to $2,686. And Qualcomm also pays dividends, so in that time you would get $324 as dividends. So if we add together those numbers, we get $3,010. And that is a gain of 201% in 10 years. Not bad. Individual insiders, that is an X. 0.1% of the company is owned by individual insiders, and we would like to see this number over 2%, so the management does not have its skin in the game. And are individual insiders buying? That is an X. We are actually seeing a lot of sale transactions in the past few quarters. And do super investors own this company? That is a check. There are 5 super investors that own shares of Qualcomm, including people like David Katz, David Tepper, and Lee Ainsley. And are they buying right now? That is an X. They bought over 2,000 shares last quarter and sold over 32,000 shares. And those reductions are all between 1% to 9.7% of their investments, so nothing major, but still a meaningful change. Return on invested capital, that is a check at 20.8% 10-year median returns, and we want to see this number higher than 10%, so that is very nice. It shows that the management is doing a good job. And what do we know about net profit margin? It is a check at 23%, and the industry average is 16.5%. So they are nowhere near Nvidia, TSMC, or even Texas Instruments that we analyzed recently, but they are doing very well nevertheless. And now let's take a look at share buyback. It is a check. They bought back 33.7% of their shares in the last 10 years. So that is absolutely great news for long-term investors, because you don't have to buy more shares to become an owner of a bigger part of the company, and therefore your shares are now worth more. And the debt? It is a check. It would take Qualcomm just over a year to pay the long-term debt with a current free cash flow. And we want to see it under 2 years, so that is very encouraging. And before we continue our analysis, let's just note that there are checks all around. That shows the strength of this company. Revenue growth, that is an X at 3.7% 10-year compound annual growth rate. And we would like to see this number higher than 10%. So this growth is not very impressive. And free cash flow growth, that is also an X at 2.7% in the last 10 years. Well, it is certainly not a fast-growing company if we look at this time frame. But if we would look only at the last 3 years, then the story would be actually quite different. And earnings per share growth, that is another X at 5.1% in the last 10 years. And even though we would like to see it higher, it is much better than revenue or free cash flow because of the share buybacks. The dividend yield is 1.6%, so shareholders can expect to get $3.40 annually per every share. And the payout ratio, that is a check at 35.2%, and we want to see the payout ratio somewhere between 20 and 50%, so that is very healthy. We are getting a fair share of the earnings as dividends, but the company still keeps the majority of it to grow, innovate, or prepare for some hard times. And what about dividend growth? It is a check at 5.6% 5-year growth rate. And it is a very nice, steady growth for over 20 years. It seems that they intend to become a dividend aristocrat, and with such a nice payout ratio, it is very probable. Price to earnings ratio is 28.4, so a bit on the high side even for the current market conditions, but it is a very strong company in a fast-growing industry, so we should not expect anything else. But to properly value Qualcomm, we will have to estimate its future growth, and we will make 3 scenarios of what may happen in the coming years. So in the low scenario, we will estimate a growth of 9% for the first 5 years and then 8%. In the medium, 12% and then 10%, and in the high scenario, 14% and then 12% growth. So the low scenario is lower than the predicted average growth of the semiconductor industry, which is around 14.9%. Medium is very close, but still a bit lower than the predicted growth of the industry. And the high one is showing a scenario in which Qualcomm grows with the market. So with such estimates, the intrinsic value in the low scenario is $205, in the medium $248, and in the high scenario $287. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $143, in the medium $173, and in the high one $201. And the current share price is around $209. So it is definitely not cheap at the moment, but we may be somewhere close to a fair value. So let's open our Stock Ranking Pro, which you can get access to by becoming a patron, and let's take a look at this company. So here are all the companies we analyzed on this channel. And when we go right, we get to our scores. And we can see that Qualcomm has a very high score when it comes to financial health. If we sort the ranking by this score, we see that it is just outside the top 10. But let's take a look at the company overview. So straight away we see that financial health and also dividends are quite nice. There is a fair amount of interest from investors, though we would prefer insiders to own a bigger portion of this company, but the growth is the weak point. So let's open more information about Qualcomm and look at its history. Down here we have a graph of the revenue since 2014, and we can see that it was pretty stagnant till 2020, and in the last 3 years things started to change a bit. So it is going to be interesting to watch. Was this just a short-term spike, or are things starting to change for them? So what is the bear case for Qualcomm? Well, they are an absolute leader in 5G technology currently. However, the transition to this technology is already well underway and it may not provide a really substantial growth for the company. Qualcomm may also lose its royalty out of each phone that is sold because they are playing a very rough game with their partners like Samsung and Apple. They are squeezing from them as much as they can, and at some point those companies may want to move away from Qualcomm technologies and develop some new solutions. And the other thing is that Android phones are using more and more MediaTek chips, which is a company from Taiwan, and they are beating Qualcomm mainly on price. And what is the bull case for them? Qualcomm is trying to take advantage of the artificial intelligence boom. They started to integrate AI features into its Snapdragon system-on-a-chip smartphone platform, and also they are launching Snapdragon X Elite chips for laptops. And those chips have some great technical capabilities, including support for AI. Another part of the market they intend to fight for are cars. They created Snapdragon Digital Chassis solutions, which enable connectivity, computing, driver assistance, and automated driving. So they are definitely expanding their business. And Qualcomm may also become a dividend aristocrat in 5 years. And when we combine nice growing dividends with share buyback programs, we may get a lot of value as investors. If you enjoyed this video, then you may want to check out my analysis of Texas Instruments, or TSMC. Thank you so much for watching and see you in the next one.